Do a quick analysis forecast for the week on gold and see what's going on. We'll be starting out right here on my FX book. Before I go and check and see what kind of news we're gonna get for the week uh, around the world. I do advise anybody that's gonna be trading to search for a platform like my FX book. They have a couple of them out there, but find you one of these services that offer economic news and economic calendars so that you can have, an idea of what's going to go on worldwide with things that affect the economy and the markets. So, as far as we can see, today is the 19th, and we see that Fed chair did some talking today. And I generally watch certain news from different places, but whatever you're trading, you kind of in whatever market you're going to be in. Since we do have four markets during the day, you want to kind of be up to date on the news, the laws, the policies, the everything that's going to be changing with money. As you can see, these they give you the date, right? They give you time left, or if it's already been happened, you see you got to check, and then they give you a time until it. They give you a title of it, basically what it is, the date, and then they tell you the impact, right? And if it has previous stats, it's going to give you those previous stats. It's going to give you a little bit of information to kind of be dealing with what's going on in the markets day by day. And we see that today we had some things happen, and a couple more things going to happen. And we can see that USD inflation rate, long prime rate. So this all got to do with borrowing money, pretty much. The rest of this stuff look like some religious stuff, Pentecost, Fed Chair Powell spoke. That probably had a high impact on the market, which would explain the open today at 6 o'clock. We can see that as we go into tomorrow. We got some things going on with the JPY, Japanese yen, the euro. It kind of tells you even what it will affect, right? And the impact. So it's telling you right here that this PPI year over year for April, right, will have a low impact on the euro. So now what it would take is a little research to understand, okay, if these rates go up, how does it affect the euro? And if these rates go down, how does it affect the euro? But you see, I trade gold against the US dollar, so I'm generally looking for anything that will affect the US dollar. And again, I will be careful with dealing with news and trying to trade news. And my advice for people when it comes to news, don't watch the news. We got to understand that the news is the market manipulation. That is what manipulates the market, media and news. So a lot of times I ignore the news. I just want to know when it's going to happen and what is going to happen. I don't want to deal with news reports and media reports because that's all opinion based, right? Uh, Seldom will it be fact based. It's generally opinion based, and we know that certain things can swing the media whatever direction they want it to go. It's just whoever paying the most. So don't trust the news and the media, do your own research on things, and find these actual stats if they are possible to be found, like unemployment rates and stuff. You can look these things up. You can excuse me. You can look these things up, and if you can see tomorrow uh, in 12 hours, so it's 8 o'clock, so 8 a.m., 8:30 a.m., 9 a.m. Fed Bar speech, Fed Waller speech, Fed Jefferson speech, 6-month bill auction, 3-month bill auction, Fed Bostic speech. So tomorrow is going to be a super volatile market for the New York Open. So I'm gonna probably be out of the way. And we just got some things going on tomorrow. Not real news packed, but we do got a little bit of things going on. Tuesday, we got a lot going on with the euro, CAD, GDP. Here we go. Reebok year over year, not going to even worry about it. The Feds again, the Feds again, the Feds again, the Feds again. 43 bill auction, Feds again. All right, so it's looking like we're going to have a pretty volatile week in gold, which basically means the market is going to be moving, and we are going to be able to find some chances to extract some pips. There's a lot of action with the euro and the British pound, so we're definitely going to be seeing some movements in gold to the U.S. dollar. 30-year mortgage rates. Now, these are some things that are going to affect gold. A lot of people don't key this in, but this mortgage rate and mortgage stuff is really impacting the market right now. And I think it's the root to the U.S.'s economic woes. You know, real estate has ballooned. A lot of people got into a bunch of bad deals, and they're putting pressure on these banks because people aren't able to afford their mortgages right now. People aren't able to afford rents and things like that. So mortgages are, in my opinion, the backbreaker of the U.S. economy right now. And in my opinion, the Fed, you see all of this is going on with the mortgages, and you see the Feds speaking day after day after day. They're trying to hammer that down and stop people from, getting in these bad deals. But we got a lot of U.S. news this week. We ain't going to spend a lot of time, but I just kind of look over it and see what kind of week it's going to be for the U.S. Building permits, team jobs. This is what I do. You got to take time. You got to put some time into your craft. You got to work it like it is a business. Unemployment rate, stocks change, 4-week bill auction. See this 30-year mortgage rate, 15-year mortgage rate. This is going to be an important day. Thursday is going to be a very volatile day because this is what people are waiting on. They want to see these numbers. They want to understand what the Fed are going to do. And that's going to decide whether people run into the safe haven of gold or if they're going to, start back dollar cost averaging in their stocks or continue to build onto their real estate portfolios, durable goods, consumer. That's going to be a crazy day. So we're going to switch and get into some charts. We saw that there's a lot of economic stuff going on in the U.S. A lot of it has to do with the Feds and these interest rates, mortgage rates, and stuff like that. So that's just what we're going to be looking for. We get into the chart, and we see that gold has been on a bull run, on a bull push. This is a 1-hour chart. So since last week, the market has straight pushed up. So I want to document that. Let's document that. I'm gonna just put me a little trend line. I'm adjust this trend line because I want my trend line to touch all of these dips. There we go. That's looking good right there. I'm gonna save that to lock it in case I mess up or something or internet go out or power go out. That'll come back because it's saved into the software. Excuse me for drinking in front. I just had a little dinner before I got started. But we see it's an obvious uptrend last week in the market. And we see this news FOMC minutes, 22nd, gonna be a volatile day, durable goods, orders. And you see that Trading View didn't show us all of these other news and economic events that we saw on the MyFX book. So that's why I tell you it's always better to have a place like MyFX book that will give you this economic stuff. Sometimes right over here, you'll see they sometimes give you some news here. You can click on this and it'll open up and give you some little things that happen in the market, but it's always showing the past. All right, we want to know what's going to happen in the market, not what has happened. We can get that from the charts. So we got our 1 hour, basically that's what we got. It's uptrend. There ain't too much more to it. We see market started here after it changed its direction, set a higher high, higher low, higher high, higher low, a higher high, a higher low, and again a higher high. I'm looking for this to continue with gold, being that the economy is in the situation that it's in. I do expect there to be dips. I do expect at some point for there to come a serious correction. And when I say serious correction, I mean a major like plummet in gold price. And it's typical. The thing is to just be always on point, always manage your risk properly, and just maintain your trading plan, stick to it, stick to your strategy, and don't get beside yourself. Don't let greed overcome you, and you'll tend to find yourself okay or not getting into anything that you can't deal with. We'll go down to the 20-minute and see if there's anything we can find just from a trend line perspective. And pretty much we can see that the market is just doing what it do. I don't get into marking out a bunch of stuff. I just want important data. And that trend is pretty much the important data on the higher time frames. As I go down in time, you'll see the trends start to change and different trends also will start to show. I'm getting all the way down. We don't see anything here. I'm on 15-minute now, so what I want to do is this trend is important because this is pretty much going to give me an idea of where the market sits right now. And it does show the weekend in there. And today's open would be right here where it was very, very volatile. I watched it and it shot straight up, straight down, pretty much wiped everybody out, which is what it tends to do anytime the market opens. So my advice is not to trade market openings, but I do want to mark this structure right here. And a lot of people might not agree with the way I'm marking my charts, but hey, let them trade how they trade. We're gonna trade how we trade. All right. Now, why did I mark that trend line like that? Because it's not there to really identify anything at this time. It is there because, like I said, we got a higher high and a higher low. I'm just marking that. It never came back down and touched that, but we do have a basis to where that if the market starts to fall, we can look for the market to find support on this trend line, and it just might be something that might help us get into a position. So that's why I marked that line on there. I'll go down to 5 minutes. See what we got there. And I always like to spread it out so I can see this stuff. And then move it around. Let's see. I can come in here and find more. Kind of, we got a dip there. Higher lows, higher lows. Now this is Friday. Oh, I'm sorry. A lot of this is Friday because we got to remember the market didn't open until here today. So this is last week in the market. This is this week or today since the open. And you see we got kind of like just sideways open. We had some volatility in the open and then the market corrected itself and it's going sideways. Now I'm going to go back to my 1 hour chart. I'll go back to my 1 hour chart. And now I want to start analyzing things time by time. So the first thing I'm going to add to my chart is this emerging moving average, right? And basically I want to see how the market is reacting to this moving average. And this moving average is pretty much on point. I'm noticing that the candles are tending to stay above it and continue up as it sets higher highs and lower lows. It's above it right now. So I'm of the opinion that the market may come down and test support on this trend line. If it breaks that trend line, it'll come down to this trend line before it finds support and continues on its way up. So I'm gonna just mark that. Just for memory reference for us right now. I'll go down to 15 minutes. Let me look at the 15 minute. Let's see if the 15 minute is going to give us some info to support this. Now, we see the counter pattern is above the moving average, but it's breaking it. It's breaking the structure of the trend line. I kind of use this moving average at this setting as my moving trend line. So from right here, I'm going to want a little bit more information. I'm going to want to make sure that this will become not a trend line, but it's just there for reference on just to see if this thing is going to happen. But what I would do now is I start adding a little more indicators just to get a little bit more information. And I would first go to my favorite, the Bollinger Band. Let's see what kind of information the Bollinger Band is going to give. We always want to spread this out. I know a lot of time we see people and the charts are tiny, but you want to be able to see this stuff so you can analyze what's going on. Okay, right here is critical because my moving average is about to cross or come into contact with my baseline price moving average, I would call it, of the Bollinger Band or the middle band of the Bollinger Band. So generally, when I see this and I see this consolidation after a push up, rejections, the candles already start to move away from My top line and my upper band of the Bollinger Band. The candles are moving away. They came back up, met resistance. And I'm going to say that this is a good analysis for now. What the market's going to do is probably going to come up and beat on this trend line. Once it forms a trend line, setting a lower low, a lower high, lower low, lower high, lower low. It's going to come down. It's going to look for support. We got a new all-time high that has been set, I believe, on Friday. That was an all-time new high that was set. And I think gold is just going to continue to set new highs. I don't see a reason for it stopping. Other markets are going to be volatile. We're going to see big sales in other markets because there's a lot of uncertainty in those markets. Nobody knows what a lot of these companies and a lot of these different assets are going to do. But one thing that people know and people have always known is at the end of the day, gold is not going anywhere. It's one of the safest hedges against economic uncertainty and economic stripes. So we're going to always look for gold to be in somewhat of a bull run or a push to go and find higher prices, because at the end of the day, anything that man is in control of will lose value because we're always making something better. But it's just, they don't get no better than gold. They don't get no better than these precious metals. And it don't get any better than a lot of the precious stones, because once again, they made out of materials and things that can't be destroyed. They'll be here long, after man. And they have too many uses for man. That's a little bit over, but gold is at record level. Its future still looks bright. Barons. So I'm in agreement with Barons. I think that gold, and I'm out on a limb. I've been saying this since last year that we would see $3,000 ounce of gold this year. And I still believe that. I think that this week gold is going to continue on its path to $3,000. We might see 2,500, a little bit over, possibly 2,600 this week. I'm going to go up to a 4-hour chart and just give you guys a look at that and just let y'all understand that gold is on a mission. Let me erase some of these lines. That's another thing I always do. If I'm going to be trading, I always start with a new chart. And this is gold since 2024. The low of the year. Low of the year would be 1986. I don't think gold will ever be 1986 again. I think them days over. I don't think that fiat recovers. I think gold continues and continues and continues. And let's cross our fingers and hope that this doesn't happen. But if anything crazy goes on in the crypto world and Bitcoin and these other cryptos fall and lose support and the prices go lower than expected, I expect Bitcoin to go back to around 50,000, 40,000, 49,000, somewhere around there during the summer, and then it might push back up around the election time. You got some politicians saying that they support crypto to grab people votes and stuff. But $100,000 Bitcoin, I wouldn't wait on it personally. I mean, that's my opinion. Gold is skyrocketing. Gold has always been a hedge. Gold is what they call a smart money investment. So I just do not see some of this other stuff. Even the stock market is struggling right now, while gold is uh, skyrocketing, and that should give people a bit of an insight as to where the smart money investments are when it comes down to protecting yourself against a downturn in the economy. You know, downturn in an economy, in my opinion, you don't try anything new. You stick to the stuff that works, and gold works. That is why we're looking at this bull market in gold during this time. So it's a 4 hour chart, and it kind of just shows you we got a possible. Uh, let's see, we got some good structure here on the 4 hour, and let's see what some of our indicators are telling us. We got the Bollinger Band saying that gold is about to just keep going. When we at our EMAs, they agree, and the cloud agrees. So I would very much so be looking for gold to go ballistic this week. Um, I think that we can look. We're right at testing the high, all-time high right here, right now on Sunday in the crossover market, because Tokyo is about to, or if it hasn't already opened, to join the Aussie market. So I mean, we could just look for gold to just keep going up and up and up and up. I'm sorry, but this is the smart place where people putting their money, and we got a chance every day to come in and make us a little bit of money off of people deciding to put their money into gold. I just don't see anything that's gonna stop gold from going up. In the signals group, we're gonna be continuing to play it safe as always and manage our risk the best we can, but we're gonna go after it this week a little bit, and we're gonna try to ride this bull run up with gold, as I believe it takes us a step up to the next level. We saw price consolidate all of last week and just kind of go sideways. Let me go to a 1 hour. But we saw kind of like a sideways market here last week, and then or here last week, and today and this week, and probably going into the summer, we're gonna see gold just go up, because and it's shooting up right now. Gold just moved, made like a 40 pip move, 50 pip move since we've been on. So if you ain't in the signals channel, get there. We killed it Friday. I personally did about close to 1,300 pips on only 5 positions. So I had an excellent day Friday, and through the week I might have did about 2,500 pips, but I was very careful because the market seemed to be in a like consolidation, as we can see here, and it just went sideways. And I like for the market to uh, have a decision in which way it's wanting to go before I start the trade. And as you can see here, Thursday and the later parts of the week, we got in and we really killed this trade. We took it from about 2070. My best trade was from 2073. So I took it from about right here and I rode it all the way to the top. I killed about I killed 428 pips on 4 positions, and then 1 position. No, that's wrong. I did 3 positions with 400 and something pips, and 1 position like 100 and something pips, and that was just they were small lot sizes. I took a swing trade, but we're definitely gonna be looking for gold to continue up. We're gonna little bit of push up here. We're going to see in a little while about 10, 11 Eastern time. And once we see that, we'll meet a little resistance, price will correct. And then the London open and the Tokyo close, and then the London open, New York overlap. Gonna be crazy, but I think we see gold continue up. We don't have much data when it comes to resistance, so we're gonna have to play it how it go. I'm gonna tell you to look to scalp. And when I say scalp, I mean in and out, 15, 25 pips. And after those 15 to 25 pips in your direction, you want to either be moving your stop loss to a break even point where you're going to break even on the trade, or if you're 25 to 30 pips in profit, you always want to move your stop loss up to it, that if the trade turns around and comes back towards you, it will stop you out in profit. And, you know, we don't lose on trades that way. If we get in a bad position and it just falls and hits our stop loss, you know, we take that and run with it and come back at it after we reanalyze. But we always want to, once the trade starts in your direction, you always want to move your stop loss up to your break even or your entry price. And then once it goes into, you know, 15, 25 pips profit, move the stop loss up to where that if it turns around on you, it closes you out with a profit. It doesn't matter how much the profit is, because all profit is good, but we just want to manage our risk. And if we don't have to lose, we ain't gonna lose. That's about my time. I came on, gave you guys an analysis, what we're gonna be looking for this week. We look at a weekly chart. Gold is going straight up. You know, we got corrections and all of that, consolidations, but no matter how we look at it, gold is always going to be in a bullish position. You know, there's always an opportunity to buy. Sales are always going to be more risky in the market, so manage your risk a little bit. Be a little bit more hard on sale positions, I guess I would say. And just keep your lot sizes, you know, manageable to where that if you do get a bad position, losses don't hurt. You know, smart traders, losses don't hurt because we manage our risk properly. But we're going to be looking for the market to go up. That doesn't mean that we're going to be looking for all buy positions. We will find sell opportunities in there. So stay vigilant, stay on point. I'm going to be updating you guys in the signal groups. We got the 2 Telegram groups. We got the Trade War Chest signal group. And then we got the VIP Trade War Chest signal groups. Check out the website. It's down at the bottom scrolling. If you ain't in it, you might need to be there because that might be the missing link to your financial freedom. The Sunday live forecast, charting and analysis with the Trade War Chest Challenge is on DP. Wish you guys luck this week, and I'm out.